When it comes to making smart investment decisions, timing is everything. But how do you know when to buy, sell, or hold? The answer lies in real-time market data. It's not just about looking at past performance, it's about understanding what's happening right now in the market. In today's video, we'll break down how to use real-time market data to make better, more informed investment decisions. We'll explore how data can guide you, how to interpret it, and how to use it for smarter, more strategic moves. Real-time market data is the lifeblood of modern investing. Gone are the days when you had to rely solely on quarterly reports or old-fashioned stock tips. Today, investors have access to up-to-the-minute data that can provide insights into market movements, trends, and opportunities. Whether you're a beginner or an experienced investor, knowing how to use real-time data effectively can make all the difference. 10. Understanding real-time data sources. To make effective investment decisions, you need to know where to get your real-time market data. Fortunately, there are numerous sources available, including financial news websites, stock trading platforms, and apps like Bloomberg, Reuters, Yahoo Finance, and even social media platforms. Some brokerage accounts also provide access to live market data and advanced charting tools. Real-time data includes live price feeds for stocks, commodities, currencies, and cryptocurrencies. It can also cover information like trading volume, price changes, and recent news updates. Being aware of where to find accurate and up-to-date information is crucial. Using reliable data sources will allow you to make decisions based on the latest available information, rather than outdated or incomplete data. 9. Monitoring market trends. One of the most valuable uses of real-time market data is tracking ongoing trends. Markets can change in an instant, and being able to recognize shifts in trends, whether it's in stocks, commodities, or crypto, can give you a competitive edge. For instance, real-time data can help you spot market rallies, dips, or resistance points, which can influence your decision to buy or sell. Many platforms offer tools like moving averages and trend lines to help you visualize market trends in real time. By keeping an eye on these trends, you can decide whether the market is favorable for long-term investment or if it's better to wait for more favorable conditions. For example, if a stock is showing consistent upward movement over several hours or days, you might decide to enter the market at a good point. 8. Using volume data to gauge market sentiment. Volume data is another powerful tool available in real-time market data. It shows how many shares of a particular asset have been traded within a given time frame. High trading volumes often indicate increased market interest and can be a sign of potential price movements. If you see high volume accompanying a price increase, it might suggest strong demand, while high volume during a price drop could point to panic selling. Understanding market sentiment through volume data can give you a clear indication of whether a price change is supported by significant investor activity or whether it's a temporary fluctuation. This can help you decide whether to follow the trend or avoid it altogether. 7. Tracking volatility in real time. Volatility is a key aspect of any investment. It refers to the degree of price fluctuations an asset experiences over time. For some assets, like cryptocurrencies or tech stocks, volatility is high, meaning prices can change rapidly. Real-time market data can provide alerts about sudden spikes in volatility, allowing you to react quickly. For example, if the price of a stock or cryptocurrency suddenly jumps, you can quickly determine whether it's based on solid news or just a market reaction. A sudden spike in volatility might also suggest that there is a significant announcement or news event affecting that market, and by using real-time data, you can assess whether it's a good opportunity or a risky situation to get involved in. 6. Setting alerts for price and volume changes. Real-time data platforms often come with alert features that allow you to set notifications for specific price points or volume changes. These alerts can be triggered when an asset reaches a certain price or when there's a sudden spike in volume. This is especially helpful if you're monitoring several assets at once and want to avoid constantly checking market updates. By setting alerts, you're ensuring that you won't miss critical market movements, even if you're away from your screen. For example, if you've been watching a stock that you think might dip to a certain price, you can set an alert so that you're notified when it happens. This gives you the flexibility to act quickly and make timely decisions. 5. Analyzing news in real time. Real-time market data isn't just about prices and volumes, it also includes breaking news. News can have an immediate impact on market prices. Real-time news feeds can help you stay on top of market-changing events, such as company earnings reports, government policies, or geopolitical events that may influence stock prices. For instance, if a major company is announcing quarterly earnings that beat expectations, the stock price might surge within minutes. Being able to access real-time news and analysis helps you stay ahead of the curve and react before the broader market adjusts. 4. Making decisions with technical indicators. Technical analysis is one of the most common methods for using real-time market data. Technical indicators such as the Relative Strength Index (RSI), Moving Average Convergence Divergence (MACD), and Bollinger Bands use real-time data to help predict future price movements. These indicators are based on historical price patterns and can be very helpful in identifying entry and exit points. For example, the RSI helps determine whether an asset is overbought or oversold, signaling potential buying or selling opportunities. MACD can indicate trend reversals, while Bollinger Bands measure market volatility. By using these indicators alongside real-time data, you can make smarter and more precise decisions. 3. Incorporating fundamental analysis. Real-time market data should not be used in isolation. Combining it with fundamental analysis can help you make more informed investment decisions. For instance, tracking a company's earnings report in real time, while also keeping an eye on how the broader market is reacting, can give you a deeper understanding of whether a stock is undervalued or overvalued. Fundamental analysis focuses on the financial health of a company or asset, examining factors like earnings, revenue, market share, and debt levels. By using real-time data, you can keep tabs on news and financial reports as they are released, helping you understand how the market is pricing these assets. 2. Leveraging real-time data for risk management. Risk management is an essential part of investing, and real-time market data can help you manage risk more effectively. By tracking asset movements and market sentiment in real time, you can spot potential risks before they become bigger issues. For example, if a company's stock is dropping due to an unexpected regulatory change, real-time data can help you identify the shift early, allowing you to make an informed decision to exit or adjust your position. Additionally, using real-time data for stop loss and take profit orders can ensure that you lock in profits or limit losses without being glued to your screen. 1. Staying agile with real-time data. The most important thing to remember when using real-time data is agility. Markets can change in the blink of an eye, and the ability to react quickly is one of the biggest advantages of using real-time information. Whether you're day trading or making long-term investments, the flexibility to adapt to new data can lead to smarter decisions. By staying agile, you ensure that you're not just reacting to the market, you're staying ahead of it. Real-time data allows you to be proactive, not just reactive, in your investment strategy. So, there you have it. Using real-time market data is one of the most effective ways to make smarter investment decisions. By understanding the data sources, analyzing trends, using technical and fundamental indicators, and staying agile, you can put yourself in a better position to succeed in the market. If you found this video helpful, make sure to hit that subscribe button and ring the bell to stay updated with more investment tips and strategies. Drop a comment below if you have any questions or insights about using real-time market data in your investments. Thanks for watching, and I'll see you in the next video.